2023 WISH webinar. We'd like to remind those who have joined us today that this webinar is intended only for bank members and representatives of community organizations. This event is not appropriate for homebuyers or the general public. Here is our agenda for today. First, we'll provide an introduction to the Federal Home Loan Bank of San Francisco. Then we'll give an overview of the WISH program. We'll then talk about the application process and program participation. Next, we'll discuss income eligibility and enrollment. And in this segment, we'll roll up our sleeves and walk through a case study together. After that, we'll discuss the funds reservation process and then loan closing. We'll wrap up with how a member can request disbursement. And then finally, we'll go over some answers to frequently asked questions and have some time for Q&A at the end. The Federal Home Loan Bank system was chartered by Congress over 90 years ago during the Great Depression as a funding resource for home mortgage lenders. Today, lending institutions use federal home loan banks to help finance housing and economic development in their local communities. There are 11 federal home loan banks nationwide, and each operates as a private cooperative financial institution. We are a government-sponsored enterprise, and we're regulated by the Federal Housing Finance Agency, the same regulator as Fannie Mae and Freddie Mac. As I just mentioned, FHL banks are cooperative, and the FHL Bank of San Francisco is owned by member institutions headquartered in Arizona, California, and Nevada. That means our member institutions are our shareholders and also our customers. Our members include commercial banks, savings institutions, credit unions, insurance companies, as well as community development financial institutions, or CDFI. While we are a privately held company, we do have a public service mission, and it's because of that public service mission that we provide a variety of products and services to help support and benefit our members and the communities that they serve. This graphic demonstrates the products and services we provide to our members, which include grant programs and credit programs. We offer support for affordable housing through the Affordable Housing Program, or AHP General Fund, and homeownership support through the AHP Set Aside Program, or WISH program. New this year, you'll notice the Nevada Targeted Fund, which specifically funds affordable housing projects in Nevada. And we also have AHEAD, our Economic Development Grant Program. And we provide outreach and program education, such as today's webinar, to help educate and benefit our members and the communities they serve. We are required by our regulator to allocate 10% of our net earnings each year to fund the Affordable Housing Program. A percentage of the AHP allocation is then used to fund the WISH program. The WISH program is a matching grant program for homeownership, and the funds are used for down payment and closing cost assistance. The allocation for 2023 will be determined in March of this year. And for reference, in 2022, $11.1 million was allocated to the WISH program. Next, I'll give an overview of the WISH program. WISH stands for Workforce Initiative Subsidy for Homeownership. It provides matching grants to eligible and qualified first-time homebuyers. The match is a 4-to-1 match based on the homebuyer contribution up to $29,172. For example, if a homebuyer contributes $7,250, we can match up to $29,000. And please note, we strongly recommend members round the subsidy amount requested to $29,000. From an operations perspective, $29,172 is a little messy, and we want to avoid any errors. The homebuyer contribution can be household savings, which includes IDA, or Individual Development Account Savings, or FSS, Family Self-Sufficiency Savings. It can also include gift funds or sweat equity in a self-help transaction, such as Habitat for Humanity sponsored homebuyer. Other grants are allowed in the transaction as they help make the transaction and the mortgage more affordable for the home buyer. However, other grants are not considered part of the home buyer contribution. Credits or concessions from a party of the transaction, such as the seller or the lender, are allowed. But again, credits and concessions are not considered home buyer contribution. The participant must be a first-time home buyer in accordance with our definition, which has been adopted from HUD's definition. This next bullet is very important. The WISH program does have an income restriction. It is restricted to households that are earning at or below 80% AMI or area median income. And we'll go into this a little bit more a little later. The home buyer must also complete a home buying counseling program provided by an experienced organization. Finally, there is a 5-year retention period, and after 5 years, the WISH grant is fully forgiven. Next, a little about the application process. Who can apply to the WISH program? Any member of the Federal Home Loan Bank of San Francisco in good standing may apply to participate. Our application window is currently open, and the deadline to submit an application is February 15th at 5 p.m. Pacific. Application materials are published on our website and consist of 3 documents. The first provides detailed program information and application instructions. The second is a program participation form, which is a simple 1-page document that asks for basic information from our members. Finally, there is a direct subsidy agreement, or DSA. The DSA is a legal document. It's a contract between us, the Federal Home Loan Bank, and the member institution. This document was developed by our legal department, and we encourage our member institutions to have their legal department review this contract prior to signing and submitting to us. And also please note that the direct subsidy agreement, it must be signed by an authorized signer of the member institution. Materials must be submitted to us electronically via our secure portal. In order to get access to that secure portal, our member institutions must complete a workspace setup request form and send it to us no later than February 8th at 5 p.m. I want to remind our members that may have participated in the 2022 program that all members that want to participate in the 2023 program must submit a new setup request form, even if you've participated recently. Let's look at a timeline for our 2023 program year. As I just mentioned, our application deadline is February 15th. On or around April 3rd, we will announce our program allocation to our members as well as on our website. The next day, April 4th, our program will officially begin. And these little individual houses here that you see represent each home buyer that gets assisted throughout the program year. 2023 program funds can be used by members to fund eligible home buyers who've opened escrow by March 31st of the following year, or 2024 in this case. As you can see, our program year is 1 full year. If home buyers open escrow in March of 2024, we expect that most will close escrow by April or May, but certainly by June or July, we expect all escrows to have been closed. Here is a screenshot of our website, FHLBSF.com. Our website has a lot of useful information, program details, as well as forms that the member will need to fill out. I'll quickly point out where you can find this information on our website. When you first come to our homepage, you can go to Community Programs, select Grant Program, and then come to the WISH section. All the information we've talked about is included here. You can also access forms and documents from the Resources tab. Here you'll find the WISH program participation form and other program documents. Let's move on to the disbursement process. How does disbursement work? Well, there are 5 milestones from enrollment to reimbursement. The first step is enrollment. It's up to our participating member to identify and determine income eligibility and then enroll the household into the program. Some of our member participants work with community partners to identify those home buyers in their local communities. We don't have any objection to this, but I do just want to remind our members that it's the member that ultimately determines homebuyer eligibility, and it is our member that enrolls the household into the WISH program and not the nonprofits or the housing counseling partners. Next, after the homebuyer has been enrolled into the WISH program, and after they've identified a home to purchase and are in contract or in escrow, the member may then reserve funds for each eligible household. And I want to emphasize that the member needs to income qualify and enroll the household first, and the household must be in contract before reserving funds. At loan closing, the member will front the WISH grant to the homebuyer in escrow. And only after escrow has closed will the member submit to us a disbursement request. You can do so by gathering all the required documentation after the household has closed escrow and uploading the documents to our secure portal. The final step of this process is reimbursement. Upon receipt of a complete disbursement request from our participating member, we will validate and confirm all eligibility and conditions have been met and then reimburse the member. We strive to do it within 30 days from the time we receive the disbursement request. However, depending on the volume of disbursement requests, there might be a delay. This can happen during times like now when the application window is open and we're assisting our members in the application process. Now I'll hand it off to Cindy.
Thank you, Noelle. During this part of the webinar, we're going to cover an overview of some of the forms and documentation you'll need to determine income eligibility. We'll also go through a case study together. Let's start by looking at income eligibility. Program and income eligibility must be determined at the time the home buyer enrolls into the WISH program. From the time the home buyer enrolls in the program, escrow must be opened within 1 year. As an example, if a household enrolls on May 1st of 2023, escrow must be opened no later than April 30th of 2024. Now let's take a look at our Household Income Qualification Workbook, or the HIQW. In order to be eligible for the WISH program, a household's total income must be at or below 80% of area median income, or AMI, at the time of enrollment. Note that we require all of our members to use the HIQW to calculate income so that we can keep our practices consistent and transparent. Be sure to look for the latest version of the workbook that's available on our website. When you review the HIQW, you will see the 4 tabs that are previewed here. We'll take a brief look at each tab so that you may get an idea of what information is available there to guide you through your calculation. Let's start by looking at the Guidelines tab. If you're qualifying income household, or if you're qualifying household income for the first time, it is a good idea to start here. The tab highlights some of our policy, and you want to pay particular attention to the wish line item since we do share this form with the AHP General Fund and the Nevada Targeted Fund program, which reference rental projects that do not apply to the WISH program. This page also lists the sources of income that should be included or excluded as annual income in your calculation. So be sure to check this page before you start your calculation. Now let's look at the Acceptable Verification tab. This tab lists all the required verification documents that you'll need to provide in order to validate income. For example, for someone who is employed full-time, you can see that either a verification of employment or 3 recent consecutive pay stubs are required. Additionally, the most recent federal income tax return, including all schedules, and W-2 forms are required to verify income. The federal tax return is also used to verify the household current address at time of enrollment. So keep in mind that we only require the federal tax return so please do not submit any tax return or worksheets. If you have questions about what documentation you should provide, be sure to visit this tab. Now we'll move on to the Instruction tab. This tab provides step-by-step instruction on how to complete each section of the form and how to calculate each source of income. We'll walk through these steps together in just a few minutes in our case study. Now let's look at the Household Income Qualification tab. This is where you'll find the actual Household Income Qualification worksheet. This worksheet is a fillable form and has drop-down menus and built-in formulas. The shaded cells on the worksheet are protected, so please do not tamper with them. Note that this form, once it's completed, must be signed by both the home buyer and the member contact. Now we're going to talk about determining Area Median Income, or AMI. Before the HIQW can be completed, we have to first determine the AMI that's set by HUD, and then compare it to the household in total income. Determining Area Median Income involves knowing three factors. The first of those factors is location, or the MSA, which stands for Metropolitan Statistical Area, or the home buyer's current address at time of enrollment. Note that this is not the address of the property that's being purchased. Please use the website you see linked here to determine the household MSA. Secondly, since the income limits adjust for family size, we need to know the number of people in the household at the time of enrollment. And finally, we need to make sure we use the correct year's income limits that are valid at the time of enrollment. Please note that HUD releases new income limits on an annual basis. However, they don't necessarily release them at the beginning of the calendar year. For example, in 2022, the new income limits were not released until April 18th. And for the current year of 2023, the limits have not yet been released yet, and we're expecting those to come out in spring. Now we'll look at our case study. For our case study, we're going to examine the John Doe household. We will review the AHP Household Income Qualification Workbook and complete the worksheet together. We'll also look at how to determine the HUD AMI limit for the household. If you were going to the HUD's website, you would find a similar income table to what you see here. Since HUD has not yet released the 2023 income limits at time of enrollment, we will use the current 2022 income limits to determine income eligibility. First, we need to identify the MSA for the household. In this case, based on the enrollment address, the MSA is Phoenix, Mesa, Scottsdale of Arizona. The second step is to make sure we're looking at the figures correspond to the number of members in the household. Finally, we want to identify what very low income is. The reason we do this is because HUD states that very low income is actually 50% of AMI. So we'll use this figure and multiply it by 2 in order to figure out what 100% AMI is for the area. So here we take $44,150 times 2, and we will reach $88,300 as the 100% AMI. We'll go ahead and plug this figure into our HIQW. So here is our sample HIQW. Let's go through how to complete this worksheet together. I'll point out the areas where you need to enter data in order to complete the form correctly. First of all, you will start in section 1 and enter the date of enrollment. Keep in mind, this is the date the member, not the home buyer, signs the enrollment form. Then you will plug in the proper MSA of the household. based on the resident's enrollment address. And after that, you will plug in the 100% AMI figure we just determined. Next, you'll go to section 2 and enter the names of all the household members in the name column. You will come to the next column and you'll see a drop-down menu that allows you to plug in the relationship of each household member to the head of household. You will enter the date of birth for each member, and the age will auto-populate in the next column. And finally, for section 2, you will enter the last 4 digits of the Social Security number for each household member. Next, we'll move on to section 3. Now for section 3, you will enter all the income earning assets that the household has. Note that for any assets that are over $5,000 or more, you will need to provide documentation so that we can validate the reported current value and interest rate. If there are no income earning assets to report, you can go ahead and mark the little white box on top. Now we'll move on to section 4. And this is where we'll perform our income calculations for the household. We'll start with entering income information for each household member. Note that in the column on the far left-hand side, you can simply plug in the number that corresponds with the household member's name in the table above, and the name will auto-populate in the second column. You'll then choose the type of income from the drop-down menu in the following column, and then you will manually enter the type of documentation you use to verify income. So now let's start calculating income for our first household member, John Doe, who receives employment income. We received 3 recent consecutive pay stubs for John. In our case study, we're only going to analyze one of the 3 pay stubs for him. There are a few things we want to identify on all 3 pay stubs. First, we need to correctly identify how frequently the homebuyer receives income. As stated right here, John is paid bi-weekly, meaning he receives 26 paychecks in a year. Next, we look at the different types of income that he receives in the paycheck, especially taking note of any income aside from his regular pay. We can see here that John did receive overtime as well as bonuses. Unless we have verification otherwise, we're going to assume that these types of pay are a normal part of John's income, and we'll include them in our annualized calculation. Next, we want to identify his gross pay in the pay period, and we'll do that for all 3 of the pay stubs. We'll use these gross pay amounts for our first calculation to determine his average pay per pay period. We'll also use his year-to-date gross on his most recent pay stub in order to perform our second calculation in the year-to-date calculator. Let's go ahead and plug this information into our HIQW. Since John receives his pay on a bi-weekly basis, we will go to column E and enter in the gross pay for each of the 3 pay periods. If I can draw your attention to the calculation up at the top, what you see here is that we've plugged in his gross pay received over the 3 pay periods and then divided the sum by 3 in order to arrive at his average pay per pay period. After this, we will enter in column H the number of pay periods within the year. And once we've done that, we'll arrive at our first income projection for this household member. Now we need to perform a second calculation, and we'll use the year-to-date income calculator. In the year-to-date calculator, we need to plug in the start date, end date, as well as his year-to-date gross. The end date is the pay period end date on the most recent pay stub. As for the start date, we're going to use the day prior to the first date income was received for the year. Unless we have verification otherwise, we're going to assume that John's first date that he worked and received income was January 1st, and therefore we'll plug in December 31st of the prior year here. So keep in mind that for each source of income, we need to perform two calculations. For the bank's purpose, we want to be conservative and use the highest income projection for this individual. So if we compare John's income from his average pay per pay period method to his income in the year-to-date calculator, we determine that the highest income is $40,178.67. And we'll leave this figure here in section 4 of the form here. Now, in the event that his W-2 income from the prior year from the same employer is higher than the projections from these two methods, the higher W-2 income from the previous year must be used instead. Now let's move on to Jane Doe, who is a self-employed person. And we'll take a look at her income documentation. For anyone who is self-employed, we do indeed need to verify their two most recent year's tax return. For our case study, we're only going to review one, and we'll just assume that we've seen the other one as well. Something to note here is that not all of the expenses that the household member has deducted are considered qualified expenses. In this case, the household member has deducted depreciation, which is not a qualified expense. So for our calculation, we'll start with the gross income, and then we'll subtract only the qualified expenses, which you see here listed in item 22, 25, and 27A. However, we will not deduct the unqualified expense of depreciation. Her adjusted net income would turn out to be $4,950. And we'll plug this information into our HIQW. So again, for the first calculation we're performing for Jane is the average of her two most recent years' income based on her tax return. Since we're basing this on an annual basis, we're going to go to column G. Drawing your attention to the top of the form, you'll see that we have added the two adjusted income of the previous 2 years, and then divided that number by 2 to get the average in annual income. Finally, we'll move over to column H and enter the number of pay periods per year, which is 1, to determine her average annual income over the last 2 years, which is $6,000. Again, let's remember that we have to perform a second calculation. For the second calculation of self-employment, we're going to look at Jane's year-to-date profit and loss statement. Once again, not all of the expenses that have been deducted are qualified. So for our calculation for Jane, we will include only the qualified expenses. We'll take her net income and then add back the unqualified expense, which is depreciation, and we'll arrive at $8,500.50. And we'll plug this figure into our HIQW. As you can see, we're plugging in this information into our year-to-date calculator. Just like for John, unless we have verification otherwise, we'll assume that Jane's first date that she worked and received income for the year was January 1st. And therefore, we'll plug in December 31st of the prior year as the start date. So as you can see here, her annualized, for Jane, what you note is that her annualized income derived in the year-to-date calculator actually appears to yield a higher projection than her average income of $6,000. So this case, since we always want to go with the most conservative figure, we're going to plug in the higher projected figure into line 2 and replacing the initial figure that we arrived at earlier. So now we've completed our calculation for Jane. Let's go ahead and take a look at the next member of the household, Joanne Smith. For Joanne Smith, the documentation that we received is a benefit letter from the Social Security Administration. What we see here is that she received the same amount every month, which is $935. So it's fairly straightforward, and we're going to go ahead and plug this information into our HIQW. Since Joanne does receive her benefit once a month, we plugged in the information in column F. And for column H, we've entered 12 for the number of benefit periods that she has throughout the year. Note that although we have stressed that 2 calculations must be performed for every income source, for fixed income like Social Security, where there is no variation, we don't need to perform a second calculation because it would be identical to the first. So this is the number we'll leave in place for Joanne Smith. Finally, we want to examine the income for the last member of the household, Jill Doe. Jill is over 18 years old, so we do need to verify her income. And we'll look at the document that she provided. For Jill, what we received was a no income affidavit. It lists and confirmed that she is not receiving any income from quite a few sources. It is signed and dated within a reasonable time from the time of enrollment. So we'll take this as verification for her income. On the HIQW, we won't enter any information aside from noting that we have the zero income affidavit for her. With that, we have completed our income calculation for each member of this household. Now we'll go to section 5. And here we look at the total income amount that we arrived at to make sure that the household is indeed income qualified. We can see that this household is indeed eligible at 68.76% AMI. Now we want to make sure we take a moment to complete the note section. This is where you enter any information that would help the bank understand how you performed your calculation. If you have information about any discrepancies that you found, or about a detail that might not be obvious in the documentation, this note box is where you would share that information. And finally, just another reminder that we will not accept this document as completed unless it has been signed by the head of household as well as the member contact. Now let's take a look at enrollment. Now that the member has determined that the household is indeed income eligible, the homebuyer may officially be enrolled into the WISH program. As we stated earlier, the date that the member signs the enrollment form is what we consider to be the program enrollment date. This date starts the clock for when the homebuyer must open escrow to use the WISH funds. Note that the address listed on the enrollment form must be the address of the residence of the homebuyer at the time of enrollment. So let's take a quick look at our enrollment form. On this simple one-page form, there are a few instructions at the top you'll want to take note of. Keep in mind that the member should not sign the form before the homebuyer. A final point I want to mention is that the income documents you use to validate income must be dated within a reasonable period from the time of enrollment. For example, in our case study, the enrollment date that we used was January 9th of 2023. And the last pay stub provided for John was for the pay period ending on December 25th of 2022. The profit and loss statement for Jane was dated through November 30th of 2022. Now let's talk about the funds reservation process. Funds are reserved on a first-come, first-served basis. Only participating member institutions may reserve funds. The homebuyer must be income qualified and enrolled into the WISH program. And is already in contract with closing scheduled within 120 days. A member can request a fund reservation by sending an email to our Wish portal account. The email should include the reservation year, the home buyer's name, the requested subsidy amount. Remember, the maximum is $29,172 per household, but we strongly encourage and recommend that our members round out the subsidy amount to $29,000. The email also needs to have the scheduled loan closing date and the purchase property address. Once we've received and processed the reservation request, the member will receive a funds reserved email confirming the reservation has been made and is valid for 120 days. Reservations can be made until the funds in the program year are fully exhausted. Finally, we require our members to notify us if escrow is canceled or delayed for more than 60 days. We want to get the most accurate information of our pipeline so that we can make any canceled program funds available to another eligible home buyer. With that, I'll hand it over to Rena.
Thank you, Cindy. Let's take a look at what happens at loan closing. As we mentioned earlier, the home buyer must complete counseling in order to receive a wish grant, and that counseling session must be done prior to loan closing. The home buyer counseling program should be an experienced organization, and we do require a certificate of completion to be included in the disbursement request package. Next, I will go over the retention mechanism and requirements. Household receiving a wish grant will be subject to a 5-year retention period. We require our members to submit the promissory note, deed of trust, and rider to deed of trust. To make things easier for our members, we publish templates on our website, the promissory note, as well as the rider to deed of trust. Both of these versions were updated in January of 2022, so please visit our website and get the most current version. For the deed of trust, the member must provide their own. The wish program lien may be in any position, second, third, fourth, and so on. A reminder that the member is the lender on the promissory note and the beneficiary on the deed of trust. We published a fairly new retention document, the promissory note and retention agreement for tribal land. This document does not require recording with the Bureau of Indian Affairs. We want to make things easier for our members in the effort to support Native American home ownership. For the next few slides, I'm going to go over the retention requirements a little bit more. We recently created flowcharts for the repayment process to provide our members a gist of the process flow in a single glance. We hope that the flowcharts will help facilitate completion of the applicable worksheet, which we will share with you on the next slide. I mentioned there's a 5-year retention period when a household has received a wish grant. If in the case of a sale, a refinance, or a foreclosure, a notification from the member is absolutely required. While the notification is required, a repayment may or may not be required. We perform a 2-method calculation. It is the lesser of the pro rata calculation versus the net proceeds calculation that will determine the final repayment that is due. For this reason, we recommend that the home buyer retain any documentation concerning principal paid on any senior mortgage, household investments, or any capital improvements that they have done to their home. We published a notice and repayment workbook on our website, and I will also go over it here. Do remember that we require our members to submit notification 10 business days prior to any scheduled loan closing of a sale or a refinance. As mentioned earlier, we created flowcharts to get an overview of the repayment process. So where to begin? This flowchart was created to help determine what worksheet to use, repayment worksheet or no repayment worksheet. Let's begin at the start at the top of the flowchart. The down arrow from the start leads us to a decision box. Is the event a sale? If yes, the arrow directs you to another decision box. Is it a sale to low or moderate income household? If yes again, then the arrow points to the process box stating to use the no repayment worksheet. On that note, let's move on to the next slide. The no repayment worksheet flowchart is quite simple as it shows the specific scenario when the closing disclosure and HUD value limit information is required. Let's begin at the start. The arrow directs you to the first process step, which is to fill in the no repayment worksheet. Follow the arrow to the decision box. Is the event a sale to low or moderate income household? If yes, the arrow directs you to the process box stating that a closing disclosure and a screenshot of the HUD value limit is required as supporting documentation. The arrow then points to the last task, which is to submit the worksheet and the documentation to the bank 10 business days prior to the anticipated sale. The repayment worksheet flowchart helps determine what fields should be filled in and what specific supporting documentation is required if applicable. Let's go through one scenario. From the start, the arrow directs you to the first process step, which is to fill in the repayment worksheet. Follow the arrow to the decision box. Is the pro rata calculation between $2,250 and $2,750? If yes, the arrow directs you to provide the new closing disclosure. From here, the arrow goes to another decision. Is the pro rata calculation $2,500 or less? If yes, then repayment is not required. The arrow directs you to submit the worksheet to the WISH mailbox, then to another decision box asking if there is any amount to be repaid. The answer is no, and that ends the process. I know there's a lot going on here, but you can visit our website to take a closer look at this diagram and the other flowcharts. There are 4 scenarios when the repayment is not required. 1, if the WISH-assisted home is resold to another income-eligible household, then no repayment is required. In this scenario, use the no repayment worksheet. There are 2 ways to verify that the new home buyer or the new purchaser is in fact income eligible. Number 1, the member may use a home buyer income proxy method. You can go on to HUD's website and look up the Home Housing Trust Fund home ownership value limits. If the new sale price of that WISH-assisted home is less or equal to the value limit, we will assume the new purchaser is income eligible and no repayment is due. Or the member may provide us with a new purchaser's income documentation for us to validate their low income eligibility. Number 2, in the event of a refinance, if the WISH lien is subordinated, then again, no repayment is required. Use the no repayment worksheet to report in this scenario. Number 3, in the event of either a sale or a refinance, if the payment amount is going to be $2,500 or less, then no repayment is due. There's a caveat here. The member must use the repayment worksheet and go through both the pro rata calculation and the net proceeds calculation in order to determine whether that amount is more or less than $2,500. So be sure to first use the repayment worksheet. In the event of a foreclosure or deed in lieu of foreclosure or assignment of the FHA mortgage back to HUD or the death of a homeowner on the WISH-assisted home, then no repayment is required in any of these scenarios. Only a notification is required from the member using the no repayment worksheet to notify the bank of the event. Next, I'm going to show a case study to demonstrate how easy it is to report when a new purchaser is income eligible. In this case study, we have a WISH-assisted home buyer, Larry Doe, who is selling his home in the Phoenix area in Arizona. A member can look up HUD's website, and the link is available on our website. It's also available here in the PowerPoint slide. From the website, please be sure that the new limits are in effect. HUD published these limits on June 1st, 2022. And until HUD publishes a new value limits for 2023, we will keep using the 2022 limits. We want to come to the correct MSA or Metropolitan Statistical Area. In this case, we know that it is in the City of Phoenix in Maricopa County. The closing disclosure shows that the new sale price is $220,000, less than the sale price limit of $296,000. For this reason, under the home buyer income proxy, the subsequent purchaser is low or moderate income and therefore no repayment is due. The member can then come to our website, use our workbook, and select the no repayment worksheet. Please make sure to visit our website and use our most current version, which was updated on April 18, 2022. Fill out this information and send to us. Here's the screenshot of our notice and repayment workbook. Look at the instructions tab to see which worksheet to use and if supporting documentation is required. We also provided the HUD Home and Housing Trust Fund's website link, so you can click on that and look up the value limit. Below the no repayment worksheet, additional information is provided on what to do in the event of a sale. Reminder for the notice and repayment workbook. Again, we must receive your notification 10 business days prior to the scheduled new loan closing of a sale or a refinance. From the closing disclosure, use disbursement date as the loan closing date. Please visit the bank's website for the repayment flowcharts that should provide a friendly guide to this process. We will now cover the closing disclosure form. We require a copy of the closing disclosure that must be signed by the home buyer. If the closing disclosure does not list some of the details we look for with a wish grant, we require a copy of the closing disclosure and the final settlement statement prepared by a title or escrow office. Please send us the most updated version of the closing disclosure. If the final settlement statement is also provided, the closing disclosure should match or closely mirror the items on the final settlement statement. There are a few key items that we look for on the form. The home buyer's contribution amount, which must be at least 1/4 of the subsidy requested. The closing costs should be customary and reasonable. And the total wish grant amount must be evident. There should be no more than $250 in cash back to the home buyer. This is a regulatory requirement, and we cannot provide exceptions or allow any amount over $250 in cash back. Let's look at a sample closing disclosure form. I'll go straight to page 2 to point out a few things. Page 2, line A, shows the origination charges. We look here to consider if the closing cost involved in a transaction is reasonable. Next, on the third page, section L, lines 1 and 2 show deposits of $7,000 and $3,000 from the home buyer, so we can clearly see the home buyer's contribution. On line 6, we see the home buyer received a grant of $20,000 from the City of Phoenix, and on line 7, the wish grant of $29,000. As stated earlier, the wish grant is only matching the home buyer's contribution, so the City of Phoenix grant amount could not be considered as a contribution that the wish grant would match. I also want to point out that the wish grant could be recorded as the third lien for this transaction, behind the first mortgage and behind the City of Phoenix grant. Finally, at the bottom of the page, you'll see the line cash to close from borrower. If the borrower did bring more funds at closing, this amount would count towards home buyer contribution. Note that if an amount of over $250 in cash to close to borrower, we would not allow that. Even if the home buyer brings in more than the minimum required home buyer contribution, more than enough to make the 4-to-1 match ratio, we still do not allow more than $250 in cash back. However, we do allow for principal paydowns of the first mortgage in the event there is excess cash at closing. Under AHP regulations, the excess funds cannot go back to the home buyer in cash, but you can apply the funds towards a principal paydown. In this example, you can see on line K5 that there was a $1,000 in excess cash at loan closing going back to the home buyer by means of a principal reduction rather than any amount in cash to close to borrower. To talk about our next topic, I'm going to turn this over to Noelle again.
Thanks, Rena. Let's move on to how to request disbursement. After each household closes escrow, the member bank must collect and submit to us a complete disbursement request. There are important timelines to keep in mind as the member prepares a disbursement request. We must receive a request within 2 months of the home buyer's loan closing. If there's any deficiency or issue with the documentation, it must be cured within 4 months from the time we receive the disbursement request. Let's look at an example of that timeline. If the home buyer closes on a home purchase on June 1st, then the member bank must submit a disbursement request to us within 2 months, which would be no later than July 31st. Then the member bank has until November 30th, or a 4-month period, to cure any deficiencies. Altogether, this is a maximum 6-month time frame between when the member bank fronts the grant funds at loan closing to the time of reimbursement. This timeline is a direct recommendation from our regulator. If the member bank does not comply with the time limits, we reserve the right to decline the disbursement request, and the member bank may not be reimbursed. Also, keep in mind, we recommend submitting disbursement requests as early as possible so we can reimburse you as quickly as possible. For the disbursement request, the member bank will submit to us a package of documents, and the documents are all listed here on the slide. It's worth mentioning that we have a WISH program disbursement checklist that's available on our website. I encourage you to read through that checklist since it contains a lot of helpful hints for items that are frequently overlooked. We've covered a few of the required forms listed here already in our previous segments, so now I'll go through the remaining forms in the next few slides. The certification and disbursement request form asks the member bank to certify that the disbursement request submitted meets all program requirements. The form must be signed by an authorized signer on file with the Federal Home Loan Bank of San Francisco. And please note that the member's signature date should be on or after the loan closing date. Here you can just see what the form looks like. We also require the CDR Attachment 1 form. This is an Excel form, and we've just published a new version on our website. Please be sure to use this latest version, as the old version will no longer be accepted. To highlight a few key features of the form, notice there's a progress bar at the top to guide you and tell you when the form is 100% complete. The form must be 100% complete prior to submission. There are also fields provided for explanation for APR and housing expense to income, or HTI ratio benchmark deviation. These 2 fields must be filled in. Letters or memo attachments will not be accepted. This form is a summary of the transaction details, and we ask you to provide information that is consistent with the backup documentation being provided. Many of these pieces of information are data points that we report to our regulator, so accuracy is really important for reporting purposes. There are a couple things we want to mention about document submission. Members must submit program documents electronically via the bank secure portal. And it's critical to redact all personal identifying information, or PII, on those documents. This includes the first 5 digits of Social Security numbers, but please leave those last 4 digits, all bank account numbers, and driver's license numbers. One final point I want to mention about document submission. On our website, we have a page of instructions to show you how to upload the documents to the Workspace portal. If you have any questions on the process of uploading documents for the application or a disbursement request, we highly encourage you to visit this page prior to submission. Please also note that when an email is sent to request a workspace to submit your application or set up a homebuyer folder, we do our best to respond within 24 to 48 hours. But please note this is not an automated system. We must review and respond to each email request individually, so we appreciate your patience during peak times, such as now during the application submission window. All right, we are in the final stretch of the presentation, and I'm just going to go over some answers to frequently asked questions. First up, funds reservation is on a first come, first served basis. Each reservation is valid for 120 days. I want to emphasize again that households must be income qualified, enrolled, and in contracts before the member reserves funds. We've had some members cancel reservations because they did not income qualify households before reserving funds. So they realized after that the households were not actually eligible. So it's very important that funds are only reserved after households have been income qualified and enrolled and are in contract. The disbursement request must be received by us within 2 months after loan closing. We encourage our members to send us the disbursement request as soon as possible, though. Many members send disbursement requests to us within a few days or within a couple weeks after loan closing. Remember, the sooner you send us the disbursement request, the sooner we can review and the sooner we can reimburse the member. A reminder to please validate all household members. Generally, dependents and other household members are already reported on the head of household's federal tax return, and we can validate them that way. If any dependents or household members listed on the income worksheet are not on the federal tax return, though, we will require separate third-party validation. Income qualification relates to all adult household members. And when we say adult household members, that's defined as anyone that is age 18 years or older. Income eligibility is based on the address of the household at the time that they are enrolled into the WISH program, not the purchase property address. We also want to remind our members to always use 2 methods to calculate income, and then also compare gross earnings with the prior year's W-2. Also, it's important to review the prior year's tax return and reconcile any discrepancies on the income document. The income on the W-2 that is submitted to us must match the income that is stated on the tax return. HTI, or housing to income ratio, our benchmark is 35%. We want to ensure that the mortgage and the transaction is affordable and the homeownership is sustainable. If the HTI ratio is over 35%, a satisfactory explanation is required as to how the mortgage is affordable. Cashback. As Rena just presented a few moments ago, cashback must not exceed $250 to the home buyer. This includes any consumer debt payoff. And on top of any consumer debt payoff, the cash used to pay for the consumer debt must be above and in addition to the minimum contribution for the WISH grant. Reminder, any excess funds can be returned via a principal reduction. Sweat equity, which is usually in a self-help transaction, such as a home buyer that is sponsored by Habitat for Humanity, we value at $15 per hour. And then retention documents. We spent a little time earlier going over our retention requirements. So a reminder again that the member must provide their own deed of trust. We do provide a template for the promissory note and the writer to the deed of trust. The member is the beneficiary on the deed of trust and the lien holder. And if the repayment amount in the event of a sale or refinance within that 5-year retention period is $2,500 or less, then no repayment is required.